Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your real estate news for the week. Go ahead and just jump right on into these slides. Today is September 2nd, 2022. My buyer and seller guides are available for fall. So if you are considering a move sometime this year, please reach out. There's so much information in these guides that it's helpful for your home search. And I would love to send this over to you, schedule a time to sit down and just chat over what all of this means in your home search or in the process of selling your home, or both selling and making a move. So yeah, these just came out a day or two ago. So we are brand new issuing these. And if you want one, let me know. And what happened this week? So last weekend, I hosted 3 open houses. Open houses a year ago were a very different story than they are today. All through 2021, we were hearing about lines to get into open houses across the country. I heard about it in California and locally, just everywhere, because there was only a couple people allowed in to a home at a time at second half of 2020 and 2020, beginning of 2021. So because there was only a certain number of people allowed into the home at a certain time and demand was so high, there was these lines that were 6 feet apart, lined up, wrapping around the block. That is something of the past. In my 3 open houses that I hosted over the weekend, I hosted one Saturday and Sunday at the same house in Seattle, and then one in the Renton Highlands on Sunday evening. I had 5 groups through the first day, Saturday at the Seattle house, 1 group through on Sunday at the Seattle house, and then the Renton home had 1 group through for that open house. So the traffic is definitely down from what it was as far as buyer demand, but that is based on the statistics and mortgage rates. That's just kind of what we would be expecting. Plus, seasonally, we are kind of reaching the slower period of the housing market. Traditionally, we generally start to see slowing down in early fall, heading into winter, and then pick up again starting in February, March of the next year. So I'll go ahead and jump back on into these slides. So Seattle area home prices log first monthly decline. This is an article that covers the CoreLogic Case-Shiller Price Index. So these numbers that just came out are for June. We just started September. So these numbers are very, very accurate, but they're kind of lagging. It tells us what has happened. In June, prices rose 18% year over year, which in May, it was 19.9% for nationwide. If we bring it to our local area, for June, we're up 19% year over year. And that's the smallest annual jump since last March. And from May to June, prices dipped about 2%, the first month-to-month decline since late 2019. So here locally, we are seeing something that echoes a lot of what's happening across the whole US. And that is that we're seeing a decrease in appreciation. There are some other indicators that are signaling a market shift. Home prices in King County dropped 11%, while they were flat at the same time last year from May through July. That is definitely more of a drop than we would expect to see. In fact, during May through July, we would expect things to be either increasing or remaining flat. It's usually May or June that kind of is the peak time period. Last year, we had home prices kind of flat during that time period, and same period this year, we've dropped 11% on home prices. So this is a quote from the managing director at S&P Dow Jones Indices. The deceleration in U.S. housing prices that we began to observe several months ago continued into June. It's important to bear in mind that the deceleration and decline are 2 entirely different things, and that the prices are still rising at a robust clip. So in our area, they did decrease from May through July, but year over year, we are still up significantly, and we would expect to start seeing our decline in prices about now. So it would be highly likely that we'll bounce back in the spring. In fact, there's this quote from the chief economist at Moody's Analytics. I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. What he's talking about here is some areas, home prices shot up far more than other areas. And the incomes, the wages in those areas don't support how greatly the prices increased. So those areas where, say, for in our close by here in like Whatcom County prices went up like crazy, but the jobs up there currently, things can change, but the current jobs up there don't support the amount that housing costs up there currently. So that's one area where we may see a decline in pricing. Lower U.S. job gain in August could aid Fed's inflation fight. So we did have a job report that just came out. The Fed, they're taking this into consideration when adjusting prices at the next, or adjusting rates at the next meeting. We had the unemployment rate go up to 3.7%, up from a half-century low of 3.5. So we're still very, very low on unemployment, but this increase in unemployment, they've analyzed it and it shows that there's people going back to work, which weren't collecting unemployment before. Now they're trying to get a job and they are applying for unemployment. Inflation did fall to 8.5% annual rate in July, whereas in June it was 9.1%. So some people think that we have topped the peak there. We have passed the peak. Other economists disagree, but gas prices fell to 3.81 a gallon on Friday, down from a peak of 5.02 in mid-June. So gas is one of those things that radiates prices throughout the economy. So seeing the gas go down, it means transportation costs of getting goods everywhere is decreased. Whole domino effect. But it looks like the Fed is still going to continue to raise rates. They just don't have the data points in place to start dialing back their rate increases. The Fed chair said that the market was clearly out of balance, with demand for workers substantially exceeding the available supply. It's estimated that there is about 2 jobs for every unemployed person looking for work. Hopefully we can see a balance of everything lining up and avoid a possible upcoming recession in the future. And that brings us to our Market Stat Minute. We had 530 new listings in King County, 749 pending, and 783 sold in the last 7 days. So if we look at what's happening, we did have a decrease in new listings and pending listings, but increase in listings sold. But the listings sold is lagging. So those are homes that went pending 3, 4, 5 weeks ago that are just now closing. But we did see a decrease in new listings and pending sales. And if we bring it to our local market areas, we saw in all 4 of our little local breakouts here, fewer new listings than pendings by a significant percentage here. We've had it all over the board leading into this week. We've had sometimes Renton had more new listings than pendings, or Federal Way kind of jumped around a little bit, but now it's kind of all over the board. We're starting to see fewer listings come to market. Basically, I think sellers got really excited and were putting their homes on the market, expecting their home to fetch a large price. But if they don't really have to move, maybe they're reconsidering whether they want to list right now or wait until the spring when there's a little bit more buyer activity, or when interest rates go down, whenever that may be. For Southeast King County, this is our monthly update from our chairman and CEO, Jay Lennox Scott. We have about 1.5 months supply. So month supply, if no new homes came to the market and we continued selling at the exact same rate, we would run out of inventory in 1.5 months. This is significantly more than it was at the beginning of the year. It was like, what, 0.3? Everything was selling right away. And if we look up at the million to 1.5 million, 2.5 month supply, and over 1.5 million, we are at a healthy market. Definitely a change from what we have seen the last couple of years. So homes aren't going as quickly. There's almost 5 months supply in the 1.5 million plus in Southeast King County. And if we bring it to Southwest King County, overall, we have a 1.2 month supply. 1 million to 1.5 is 2.3, and 1.5 million plus is 2.4 months. So there's a little bit more availability for buyers to look at in that high end in Southeast King County than in Southwest King County. But overall, 53-ish% of homes in Southwest King County are still going pending in the first 30 days. Last week, we had a weekly average mortgage rate of 5.55. And if we bring it to our weekly average this week, it's 5.66. So this looks like it's not that big of a difference, right? But if we bring it to today's interest rates, this at 6.02 is actually down significantly from yesterday. Yesterday it was 6.23. So now we're down 0.21% to 6.02, which is significantly higher than the 5.66 that they published yesterday, because it's a Monday to Monday comparison. So mortgage rates jump back above 6 and there's more volatility ahead. So the survey came out, as I said, at 5.66. Now, to be clear, the reality as of yesterday, this came out yesterday, was 6.23%. A lot has changed since Monday. Most of the change happened in the past 24 hours. During that time, bonds have sold off aggressively, partially due to compulsory trading associated with month end and partially due to economic data that refuses to show any tightening impact from the Fed policy changes. So we are definitely not seeing the Fed's rate hikes radiate throughout our economy the way that we would like to, but the labor data came back way stronger than expected. And the Fed has said it would like to see its policies having a negative impact on the job market before considering its fight against inflation. So the Fed needs to see people losing their jobs in order to lower the interest rate. Remember, interest rates are very, very low in disastrous times. Interest rates being crazy bottom low means bad things are happening, like the pandemic. So in order to come out of a recession, if that's exactly where we're headed, we will need to drop the interest rate. But before we get there, people have to lose their jobs, and it's a whole cycle that is a little bit too much to get into right now. But just wanted to touch on that because there is a lot of volatility ahead and we could see rates go even higher. And just one last reminder, my buyer and seller guides for fall are available. So please reach out if you would like one. We can send one over. We can have an appointment and go over it in person, whatever you'd like. But this information is just super important. So if you are considering making a move this year, please let me know so I can get this over to you. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you may be interested in moving to. Yeah, just reach out and we'll find a time to chat. Thank you so much for joining me on your weekly housing update. I will be back here next week at 3 p.m. to deliver your local real estate news for South King County. Thank you so much and have a fantastic week.